I'm Eric Friedman from Graph Advisors, and I'm here with Jenny Fielding from Everywhere VC. And today we're going to talk about why early stage teams should have an early stage financial model. Um, this whole thing kicked off, Jenny, when you made a pretty bold statement on Twitter X asking people, should we have a model? Should we not? It kicked off kind of a firestorm of amazing tweet replies of a lot of people. And then I think you even brought it to LinkedIn saying financial models are back. That's where I chimed in and we teamed up to actually make a template. Um, why did you say that? And why should early stage founders consider building out a model?
Well, thanks, Eric. The backstory, I guess, going way back is that during the kind of zero interest rate years, especially 2020, 2021, cash was flowing and deals are getting done at a rapid clip. A lot of shortcuts happened in our business. Almost anyone with an idea was able to raise a venture round. And so the issue with that is that many of the companies had pretty weak business models and blew through a lot of cash. And as we know, many didn't make it. So, we were also living in this kind of growth world, right? Where growth at all costs was okay. And profitability was literally a dirty word for many VCs. And fast forward to today, and after the market shifted and we've had this correction, cash became much harder to secure and the paradigm completely changed. And it became clear that companies who understood their operating model, their revenue forecasts had a huge advantage. And so, we're just seeing this real shift now. I'm curious, from your perspective on this topic, you work with a lot of early stage founders. So how does building the model help them succeed, at a high level?
So I think it helps in a few different ways, and it helps them tell their story. So first of all, it's visualizing the future you want. It's coming up with a plan and then sort of executing against that plan. A big part of this is in the investment side of things when you're fundraising. It's about showing your story versus telling your story. Slides are great, but some people want to absorb things from a quantitative perspective. And then finally, it's all about competency of modeling versus accuracy of prediction. I don't think a single early stage team has ever predicted the future really well. They're either wildly wrong because things go great or wildly wrong because things go the opposite direction. And that's where it becomes really helpful to put together a model like this.
Makes sense. So you and your team put together this great template for founders. It's simple but effective. So can you tell us why you focused on operating and revenue forecast for this model?
So there's two main parts to this model: the operating forecast and then the revenue forecast. The reason why we combine the two is that you can have a more complicated multi-sheet model, but for many people, it's easier to see everything in one space. The top is all of your OpEx expenses, and we start with salaries. Most people have 1 to 2 co-founders, the founding team, and they have their initial base salaries. We have everything hooked up pretty nicely to everything in yellow being a variable and everything in black being a formula. So to start with, you have your base salaries against incidentals like taxes and benefits, and you can see what that looks like on a monthly basis. Then you have your consultants, followed by miscellaneous costs, software, hardware, and then, of course, any advertising or marketing. And so this gives you your total expenses for that month. The revenue forecast is pretty simple. We assumed a B2B SaaS company, everybody's favorite, where they have a number of customers paying for a product at $200 a month, which is great. That gives you your famous MRR, which is lovely to see a monthly recurring revenue number. But the reality is that there's probably churn associated with that, and of course, growth. When you back out customer acquisition costs and see the revenue against that, you get a real idea of what you're spending per month. I'll summarize here by saying if you think about this as just the year, when you look at what the next 1 to 2, maybe 3 years looks like, you have a $2 to $3 million fundraise, an idea of what the future might look like, and the ability to tell that story for your B2B SaaS company. We hope that people use this model and add rows, change variables, add different people and costs as they need.
And no one needs to build out a 10-year plan.
I think we agree there because nobody can predict beyond, I would say, even 1 year, but 3 gives you probably everything you need, especially for an early team. So that brings us to a very important question. From your perspective, how does a basic model like this help founders raise money from VCs?
The question everyone wants to know. So as you know, fundraising is all about storytelling and delivering that information about your business in several formats that gets the investor over the line. And I see 3 ways to deliver any good story: by focusing on the vision, the product, and the numbers. So obviously a verbal pitch is used, it's usually focused on things like vision and, the team and the market opportunity. Whereas a product demo, demonstrates your ability to understand your customers and, can you actually build product? But equally as important are the numbers, right? And that's how many investors kind of take in, your business fundamentals, and the model, which is all about stress testing these assumptions behind the business, mostly understanding concurrent growth trajectory and associated costs. So it's my belief that the model is a critical component of any effective fundraising story and this kind of trifecta pitch. So despite everything we talked about, Eric, many founders are skeptical about the assumption, something that I just mentioned, and not having the exact numbers to input. So how should they address this uncertainty in the model that you built?
I think they just accept that they're making educated guesses. That's all a model really is. I'm a big fan of the phrase, the harder you work, the luckier you get. And this is just putting in the work. Um, this model lets you know where you're trending towards. So you made a best guess estimate in month 1. You're able to tell that story to an investor, and then you can see how you're trending towards that. It's just a great way to put up your best guess and then see how you're trending towards it. I hear often, I don't want to put together an early stage model. It's just made up numbers anyway. What is the point? And the point is that you actually serve a couple different audiences. One, it's pre-fundraising, so you can actually tell your story, and that's what we've been covering. 2, it serves the team. Hey, when should we hire this person? What does it look like if we take on this one-time expense? What happens if churn starts to go up? What happens if our customer acquisition costs go down? And serving the management team, serving your investors once they're on board, and just talking through that plan can be really beneficial.
Amazing. In models, I often see kind of an assumptions page or a summary page, but you didn't put that in. So can you explain a little bit about that?
This is simply about making it easier. If I had more time, this letter would be shorter, is the famous phrase. If I had more time, this model would be simpler. I think people get overwhelmed when there's a lot to do and a lot of inputs and how something works. I think you can see this pretty quickly and understand it. And even folks that are scared away from putting together a multi-year forecast can jump in and use it quite effectively.
All right, I love that. Well, to wrap things up, we just wanted to emphasize that building a model is not an exercise in math. It's an exercise in business strategy and understanding the levers in your business. Can you get away with not having a model until much later on? Maybe. But the model is a really empowering exercise that all founders can benefit from. And hopefully this template will make that much easier to get started. So thanks for listening.
Thanks, everyone.